Hi, Assalamu alaikum, and welcome back. So, thank you so much for all of you. Come back today. Again, we continue the discussion of funding and investment, and we continue the terminologies we have been discussing yesterday, and also the questions usually asked by the investors. Okay? The most importantly, yesterday, as we discussed, the strategies and one of the major limiting belief or one of the major challenge we all of us know keep hearing from the consumers. I don't have any money to start business. Okay, so then we will give you some strategies. Even you can raise a capital, even idea stage itself, even idea stage. Okay, forward or second round. So that's our three strategies actually based on our 100 days digital mastery challenge. We'll be sharing with you today. So this is a very full packed agenda. And without much time waste, we'll go. And I'm also prepared to have some Q&A session, end of the session. I'll take you a few questions and we'll go very intensive day today. Like you feel just like, if you those who have done an MBA, you feel, you are today doing a business management classes because a lot of terminologies, methods, and of course the strategies you are going to discuss. Okay, so get settled in. I'll connect you to the PowerPoint, and today you have a lot of new terminologies which you can go back and Google it and understand more about it. So my objective today is to share the terminologies majorly, okay, to be familiarized with. Okay, so once again, I welcome all of you for the Digital Mastery Challenge. Today we are on 37th day of 100 days, August 18th. It's a Tuesday. I'm live from Doha, Qatar at 7 p.m. in the evening. Okay. Now, funding and investment, that has been, we have been discussing now in detail about it. Now we go with the terminology, continue the terminologies to familiarize with when you start a business, as well, especially or you become a digital entrepreneur, or you're going to invest in both the cases. Sometimes you may not be working as you're not an entrepreneur. You want to invest with someone. In both the cases, the most important thing is you should know the terminologies, right? So when is yesterday, that so many terminologies we used yesterday, and today we will be continuing the same thing. Okay, now, usually now most of you will be going for a kind of a startups to start now, a new business, new e-commerce site or an affiliate website, or maybe anything which is an online business you want to start off. Now, a few words we are not never heard about it. Sometimes something newly added to the dictionary. Sometimes the recent incident has brought something, or sometimes if you are not familiar with business management or accounting and finance, so we need to know some of the words when we are approaching investors, or you as investor going invest in the company, or you work with a company, in a top level executives or a senior level manager. You should know so many words, and if you're a consultant trainer, definitely these words are very important to you to understand about it. And sometimes something is very important, sometimes not that important, depends upon what kind of a profile you are and what are the things you want to do. Please use these words and Google it and understand more about it. Go to YouTube, understand from the expert, you can listen. But as I mentioned, my objective is to give you an introduction about these words and do it. One such word is, we'll start with, and I put an alphabetical order because I got confused how we put it in the order. So we put an alphabetical order. So everything is important. Then some order should be there. So for you to understand, put an alphabetical order. So one of the things is called acquihire. What is actually acquihire? This is a very normal phenomenon started in 2012, 2013 period because many of the startups started failing. So what basically acquired means when a small failing company or initial startup, if they fail it, especially the employees will purchase that company. Okay, so that's one of the common phenomena nowadays, because the employees in the startup stage knows about the company, they have a belief about the product and services they offer, and they know so much about the thing, and they are confident that sometimes the founders sometimes the founder may be prioritized with another business, or maybe they are not able to continue when they don't have a capital to pay. So all this situation, usually, especially in the Silicon Valley, we notice that so many things instantly happen that way. So that's the reason this acquisition got a new name, the employees taking over. Even not only the startup, even a large company, you may be knowing that one of the recent airline had a crisis in the company. the employees is trying to take over the company. So this is a very common scenario. Even though it's a large corporate company, it's a $1 billion company, still even employees were trying to take it over. Okay, so that's one of the common phenomena. So it may happen with the different companies. It's called acqui-hired. Okay, so this is one terminology. So I think that's one other way you can also look into the business. Sometimes you started something, you're not able to continue. Even you can ask the staff members that, would you like to continue this business? Okay, many things. I think one other time I told you about one of my first companies in my hometown. When I moved to a new business, one of my staff took over, and he continue that business. Okay, so it is a very common and happening everywhere around the world, and people do take over that one. Okay, so especially this word became very famous in 2000 to 2013 period as the word came out, and this is approximately now majority of the companies, especially tech companies. So usually happens to tech companies, that is the intellectual capacity, or intellectual, the major resource is actually the people skill. So that's the reason employees know that they can run this business. Okay, so that's exactly this word is all about it. Okay, now this is, when you look at this, another word. I think we discussed about an angel investor yesterday. Now we have been discussing one of the opportunities, angel. So what exactly angel? An individual who invests his or her own money. Now it's early stage of the company in exchange of the a share in the company or a stock in the company, right? Now, it can be a high net worth individual, or maybe an entrepreneur, or maybe a friend or a family member, or even willing to invest in any of the ideas. So it's called angel investor, right? And yesterday we discussed about angel investors usually ask the questions part. Now, another word is people ask you, what's your burn rate? How much have you burned? So what exactly burn rate? So basically, the amount of cash you are already spending for every month for your business in relation to your capital. So how much are you burning every month? That means your salary, your current expenditure, which include your rent, your monthly marketing expenditure, your salaries, and everything. So an investor usually asks, how much have you burned already? That means how much you already invested and actually spent. That's one other thing important. It is actually there important question, and based on that, investor derives so many things. Now, how it is a burn rate is divide your capital amount by your own burn rate, but determine the burn rate is basically how much more company can run, because what are the money available, how much you're burning, so how many more months you can run, right? That's called burn. I know the burn rate is very important to know. Now, another thing is today one of the strategies based on a convertible note, which I'll discuss with you. And what exactly convertible note? Now, very early stage of the company. Some of you are come stage now. You're just starting an e-commerce company, or you're just starting an affiliate marketing company, and you don't know the valuation, right? We cannot do valuation is quite complicated as well. So there are different way of valuing it is, and you may use different agencies, and for that you need resources. And some of the resource companies will tell you are early to value as so, but you need a capital. You want someone to invest the money. So how much the stake you give, and how you can value the company to give out the stake is. So then that's the case. There's a called convertible note. Okay. So a note is worth a percentage of equity ownership in the company. You say that is actually later you can convert this convertible note and against a percentage of the businesses. So this is basically why the business owners uses to attract angel investors without having violation. Basically, again, I kind of normally an angel investor invests for this, saying that is you invest now as a convertible note, and wait later we'll convert it. Okay, so if you convert, you can hold the equity. Now the notes turn to equity as soon as another investor comes in. For example, now very early stage, actually, this is one of the best things on very early stage. You don't have the valuation, but the investor or the angel investor get a conviction about your business. So they like your business, especially for your known circle. Even you take the money from different relatives or friends. Still, this is one of the best things is issuing a convertible note, which I'll discuss with you. Convertible notes with the Eat Safe. There's another one of the strategies today. Again, discussing with us. So that time I'll explain you in detail. Now, there's something called recept and receptive. This is initially to it's a cheaper or poorer quality product. with less profitable to run and everything. Then later you go for a much better thing. So one of the strategies some company uses to understand it works or not, etc. They do that one. There's something called, people ask you exit strategy. This, I always say about exit strategy. And when we discussed the flipping, we discussed the exit strategy. So investors ask you, what is exit strategy? Of course, your vision plan must have exit strategy. That's a very, very important part, your vision plan, or your vision, when you go for a VM course, you must have an exit strategy. Now, this can be an exit strategy. We can go for IPO. It can be for get acquired by the people or the companies, or maybe a go for a public, etc. Different can be there. So that is actually your exit strategies. So as you know, the exit strategy which I discussed with you about our online shopping mall, we are looking for a 2 exit strategy. One is getting acquired not less than $300 million. That's one of the vision we are planning by a large company. Second one is we go for IPO and liquidate and raise the capital and slowly move on with with other opportunities. Okay. Then usually the word you heard going public, the company is going public. It's a kind of a called IPO. That's the initial public offering. It's one way of raising a capital. So you're offering a shares of your company for a purchase to anyone can own. So publicly owned company. All the companies go. When the Facebook went for public, it was a big news, right? So many companies go for a public, and we can own the company share, and it become IPO issues part. But actually, there are a lot of pros and cons. If you ask me, I'm not that favor of going public. That depends upon how you look into that. So you'll have a control. Sometimes you have a lot of plus and minus going for a pros and this going for an IPO. But not all the companies. Very, very less number of companies, even in US, will not go for a public offering. Okay, very less companies go for a IPO. Now, but of course, you want to go for a large scale IPO. One of the best things. Then something called incubator. There are a lot of incubator programs across the globe now, especially from the government side. There are there. So basically, you can go and get an incubator service where you get an office space, you get a mentorship, you get a training, you get a technology infrastructure. Sometimes you get a staff members, and of course office structure and licensing. Maybe sometimes working capital as well. So this is another way of getting funded. And this is best example is in the Qatar Business Incubation Center. Cubic is an example where they give you offers, and 2 years is office you can use free. And they also give you approximately 1 million to 1.5 million Qatari riyal as a startup capital. So another way of looking at raising a capital on it. Okay. Now, of course, incubators take a percentage of stake into the company, invest in the company. They own 30%, 40%. The incubators are advantageous. They do incubation for hundreds of companies. Even 3-4 companies become a large-scale success. It's enough for them to take. That's one of the best programs now. Majority of the companies, even a corporate companies coming out, universities has it, UCLA has it, various MITs having so many companies actually coming out. I know universities also coming out. Government is doing it. So you can also take an advantage of the incubators services. Okay. Now, another thing is when you sign it, sometimes the investor, you will ask investors, and yesterday I told you about NDA signing. So non-disclosure agreement, which is basically to the either employees or investors or all the people will sign a document which you don't leak the information. And employees will have a responsibility to pay the damages if they leak the with the formulas and other code, etc. Okay. This is basically kind of a protection about your proprietary code, source code, or formulas, etc. Now, different rounds of investment we have. One called seed round, another one is a seed stage, right? So it's venture capital is actually funding in different stages. They're doing the first round and second round. You can think about which stage you wanted. Maybe stage 1 can be 1 million, then can be 2 million, like that you can have. Okay. I'm going a little faster because all this information actually you can also Google it later, but I'll give you an elaboration now. And if you have any doubts, please ask me later also, because I'll conclude this, then we'll go to strategies after the questions. Now we have something called a pivot. What is a pivot? Is basically a course correction when the startup time, when conceptualize something and you do testing and then you understand the model to be changed. That's what exactly many people do, right? Like course correction of the Google. Google was working with Yahoo. Then Google decided to go alone, right? That's one of the methods. So like a different people do a course correction, that's a very important part. Then valuation of your company, valuation of your enterprise. It is basically valuation is a two-stage. One is a pre-money valuation and post-money valuation. So pre-money is how much your company is worth before the people putting the money into you, the investors investing money, what the valuation on it. And post-money, after the money comes to your account and utilize it, it is how much is the valuation. It is not the initial valuation plus the money coming, not the way. With the moment that somebody put the money, your valuation of your company will be drastically increasing. It's important to understand that one, okay? So it is a valuation can be there in every stage of the investment and different level. There will be a valuation on that one. Now, who is a venture capitalist? Venture capitalist is an investor or a group of investors who investing money in exchange of an equity of your company, looking for a higher return on investment in long term. So it's basically they look for a long term and they look for a very high return of investment as well. There's another stage called vesting. I think especially you are starting as a partners, you're vesting as a together. You wanted to start something. Now I think in the mastermind group, one of the things which I'm planning when all of you start together, there's something called vesting to come, or the team members of mentors when they want to start something and vesting become very important part. So what exactly is vesting? So vesting is basically the founders of that employees, and if employees found a company or a person, a group of friends or partners found a company, and they decide to run the company and maybe in a different level, and all of them before they receive an equity, they need to complete certain number of years. So you complete 36 months or 5 years this time, then you receive the stake of the company. And some cases you only completed 1 year, you only get this much. You completed 5 years, you get this. Something like that is also there. So this is called this is very important, vesting. And when you start in a partnership firm, and you can actually have one condition even to the partners. You say that is as long as this many years we need to complete, not only putting the money, we need it this way. So you can also have the vesting period, especially to the employees. Also, definitely you can ask this one, and that's where they increase the loyalty to the company and improve that one. Okay. Now there's something called cliff. What is a cliff of vesting is which basically somebody's actually completed the vesting period. It's called a cliff. Okay, the cliff vesting. It's called cliff vesting. Now, so these are the few terminologies. So try to understand. These are the word you can use. And even someone talk to you about this, you should have some idea. So an investor talk to you on this terminology. If you don't understand, they don't even invest with you because they think you don't understand the business. Okay. Sometimes they'll tell you need a CEO or you need someone else. Also, of course, you have a skill of the product or you have a skill of a marketing, but you don't have a skill of a CEO. You don't have a leadership. You don't have a business management skill. You don't know the business. So that's the reason it's very important for you to know these terminologies. Now, if you are a startup or a venture capital terms, what are the things you should know majorly? One is there's another word, acquisition. When you're discussing the flipping, we discuss this word called getting acquired by other company. And in a friendly terms or hostile terms, it can be there. Okay, so it's called acquisition. So acquisition and merger can be one of the exit plan as well. Then we have something called agile. Agile is a software element, especially when you're doing a platforms part. So adapting new methods is basically, it's called that one. Okay. Now, of course, the B2B, all of you know, business to business. Basically, business to business, actually, enterprise solution giving company is very easy to raise a capital than the B2C part. Okay. Now, B2B also some other companies, it's called enterprise technologies. You provide enterprise solution. That's a B2B part. That's also considered. I use the word as enterprise technology. Okay, enterprise technology, when you look at it, is when you go to different platforms. Like I mentioned yesterday, to raise a capital, you are an enterprise technology, and there is a high rate. I mean, the more number of people prefer to invest in enterprise technology. So when the business model time, I also mentioned this point, B2B and B2C, even though B2C looks very simple and B2B looks very complicated, just opposite actually the truth. And plus, even to the raising the capital, B2B is more easy than the B2C part. Now, all of you know what is board of directors, right? So people ask you what's the board of directors, what are there, and they usually have people owning the company usually become Even sometimes the advisors and mentors also be part of the board of directors. Okay, and some cases, of course, even you are taking a bank loan. Some cases, even one of the representative of the bank also part of the board member. Okay, so investors and mentors will be part of the so board of directors. Then there is something called bridge loan. Sometimes, you take a short-term loan for survival just before you're getting some fund. Sometimes some investors say, if you make it this month already, I'll fund you. So that's the time you take a kind of a bridge loan to reach there. It's called a bridge loan. So you can take a bridge loan on a personal level, or depends upon what's the level you are. You can actually look into and get this one. There is another word called buyout. What exactly buyout? It's a common exit strategy again, and some other company purchasing you completely, and they own the company. So your company buy out someone, so that can be an exit strategy with good money. Then, of course, in that case, you become rich. That's why actually all the entrepreneurs get billions of dollars or millions of dollars when they're getting acquired. Now, the capital. What is the capital? Now, the monetary asset is currently available to use. What is called capital, right? What money you have it at the moment to run your business. So the resources which we discussed yesterday. Now, entrepreneurs actually raise the capital to the company and the resources to be placed as we discussed. Now, capital under management, that which is the money at the moment you can use for expenditure and expansion and marketing, whatever your business to run or record. There's something called capped notes. What exactly capped notes? So it's a cap that's like a cap you're keeping, place investor notes in a round of financing. That's the maximum cap for a valuation of your company. You keep it that way. Okay. Then convertible debt. This is another like a convertible notes like we discussed. Convertible debt is basically you borrow money, and then later you give for that money with a valuation part. This is also convertible debt. Now this actually delay the valuation while raising the funding in an early stage, as earlier discussed. Okay, and people also debt financing. There's one terminology people use, which is actually debt. Actually, I prefer convertible notes with a safe. I will discuss with you a bit later about it. Okay, now something called due diligence. What is a due diligence? Due diligence is basically before an investor invests the money, they do everything making sure that is everything proper, and whatever the presented in the business plan document and projected everything is do that one and make sure that is whatever there's a transfer. Lack of flipping, we discussed about the due diligence of the website. Same way, due diligence of the companies here. Now, what is enterprise? When you say enterprise is basically a company or a business, right? That's called an enterprise, and a startup or companies also called as an enterprise here. Now, who is an entrepreneur? So we have to keep telling entrepreneur. What exactly entrepreneur? So then I'll tell you why I use here as a word. There's two types of entrepreneur. Now, an entrepreneur is an individual who start a business venture, assuming all potential risk and reward for his own herself. So assumption based on a assumption is working, right? So he knows the potential. He also knows the risk. That's an entrepreneur. Now, there is something called entrepreneurs in residence. So that's a new terminology. In fact, a new method many of the companies started utilizing. This is basically an entrepreneur who employed by a venture capital. Sometimes a venture capital fund a company and things are not going proper. And maybe a CEO to be changed, or then they bring out an entrepreneur in residence. So they bring him to make the things to happen properly. You might have seen this is most of the time large corporate companies or a bank goes wrong. So then entrepreneurs in residence comes up and make it proper. It can be a revival scheme, revival team, etc. Can be in that one. Okay. Then there is something equity financing, and you act of raising a capital by selling your company shares. An IPO is basically technically a form of financing. Now there's something called fund of funds. Okay, so that basically what is a fund of funds? A mutual fund that invitees, other mutual, the mutual fund they invest in other mutual fund is called a fund of funds. Okay, this is not but venture capital on large scale, but may not be startup will be getting, but long term, because most of the professional investors or a person who's invested in a mutual fund, the professional person will be handling the fund, and they will be investing in different companies. So that's the time they use this word. Then people ask you, what's your company's, are you in a ground floor? Okay, what does that mean? Many of the investors ask you, are you in the first floor or a ground floor? So ground floor is basically the beginning. And at a very early stage, it is some investors consider as a good, some consider quite risky because you're very early stage. But according to me, most of the investors take the advantage because you're very early stage, they very less valuation, and you make a lot of advantage on that. Okay, so it's advantage to invest in that level. Then there's something called initial public offering, IPO, which all of you know, the first time share goes to the market through an exchange. That's called an IPO, right? Now, what is a lead investor? It's a venture capital firm, individual investor that organizes a specific round of funding for a company. That's called lead investment. Okay. So then there's a liquidation. Liquidation is a process of dissolving a company by selling off any of the assets you have to raise the money. Your car or something, maybe some land, or maybe you had a godown or something which you have, you liquidate to that one. Now, another thing called proof of concept. Proof of concept is basically most of the investors ask this point to show your things works. So you have a beautiful business document, project report. So most of the people ask you proof of concept. That's one of the reasons which I mentioned to you. If you're going for e-commerce, you're going to affiliate marketing, it's always better to have a website and show them, and it works. Okay, and they actually really appreciate before going to invest. And that's one of the time. One of the things they'll wait for. They'll ask you when you can show me a POC, proof of stake. Proof of concept. Okay. So this is very, very important to have it. So any kinds of thing, if you're planning to do e-commerce, setting up an initial pilot website and show them how it works, how it looks like, how the transaction happens, how your concept is different, is always better to have it. Okay. There is something on recapitalization. It is a corporate recognizing a company's capital structure, changing a mix with equity and debt. It's quite complicated. It's not in an early stage, you don't know, but later it become important for you to know about it. Okay. Then something called ROI, return on investment, which is much talked about. Everybody talk about, right? It's a return on investment. How much money an investor make a profit. This is called ROI. Okay. So when you know ROI, so the investors usually use the word ROI. Okay. Now, this is basically when you look at it, one important part here. Now, why the investors invest? So the ROI part is very important. Because the investor has a multiple opportunities here. There are so many opportunities. They can invest, put in the money in FD. They can invest in a mutual funds. They can invest in a insurance. They can invest in real estate. They can invest in multiple places. Now, why should a person come and take a risky investment like a business? Because of course he's expecting a higher return on investment, and they know it makes a more better opportunity than many other things. So of course that's the reason when you plan. You should think about investors personally. When you give a little, less money, they will be comparing. Oh, then better to keep it there. Okay, so this is very important to consider that point of view. How much money he make it. Okay. Now, as we discuss a different round here. We can have an early stage. We have a initial stage. There is a seed stage. Like different stages a person can have, you can also plan. It's not only 1 or 2, 3. Depends upon your operation methods. Depends on your resource available. Depends on your business model. Everything your company can decide in a different stages, but you need to declare it at different stages. And those who are investing from outside, they should know different stages of investment as well. Okay. Then SaaS is actually one of the SaaS companies. Again, when you look at which are the company get a faster investment, of course, SaaS. Okay, software as a service we discussed in the part of our business model business. Okay. Now, another thing is called SAFE. What is exactly SAFE? Simple agreement for future equity. So that means the company are not valued now. In tomorrow, you will value this company and a minimum, there's a safe and simple agreement you do for this much equity I'll give you for this valuation. This is one of the good method before the company go for a valuation. As I mentioned, one of the strategy we'll be discussing today based on a convertible note with SAFE. Okay. So this is usually an agreement between investors and the company, and without determining a specific price of the company and putting that's an agreement in place. Okay. Now, it's a very simpler mechanism. Startups or anybody to start up this one, we can use this one. And this is one of the things which we used in Mac. So the people who want to be part of the company, initially we should have safe agreement. Okay. So very common nowadays is all this tech companies. You can also think about doing a safe. So you don't have to go for a valuation first. You don't have to invest. And investors also feel comfortable because they know this is going to happen, etc., etc. Okay. Now, what is the SPO? We know IPO we discussed, right? That's initial public offering. Then SPO is called secondary public offering. Now, when a company offers a new stock to the public, that is it's called IPO. Other one is SPO. Okay. Now, also often occurs when a founder step down as a decide to move into the lesser role within the company. This is usually what I've seen at some recently, with the different companies. We also experience this. So that's called SPO. Stage we discussed already. The different stage we will develop and do it, right? Now, there is no explicit rule as I mentioned. But actually, why I said this in a stage, the one important stage is a stage called traction. You might have seen I keep telling it traction. So what exactly a traction? So more than the proof of concept, according to me, the investor basically look at the traction because that's a real proof. Attraction is basically before you go to the market. Before you go to the market means before you go into the market to collect money from investors, and before you're inviting, you're inviting an investor, you need to have attraction. Traction is some kind of a revenue you created, some kind of a growth you created, some kind of a customers you created, some kind of a marketing channel you created, some kind of a network you created for you to establish it. This is called attraction. Why the traction is important is it shows that whatever you are put in the business plan document, it works. And a lot of confidence for a confidence building will happen for an investor because this is already happening. So the people are buying. It may not they don't look for a profit on traction. So sometimes they'll ask you how much is a percentage of margin you make it, but most importantly, how much you made it last 1 year, what is the total sale, and what is happening on a monthly basis. So this actually, I wanted to tell you one other thing. Almost all the ideas which I'm sharing today, traction is important. When you can make a traction, it's very easy to raise a capital. Plus, it is it's very good value also you can make it. So that should be one of the first goal for all of you to starting as something new now as a digital entrepreneur. Focus on attraction. Maybe 6 months time, maybe 3 months time, maybe 1 year time. Make attraction. So that shows that things works. And there's even a 100 days digital mastery program. You might have seen it. I also kept a goal. Those who are starting a business, they should make some kind of attraction the very first month itself. I mean, the moment that's the way you can plan, right? So you can say my first month of operations, or maybe for first quarter of the operations, we have a traction this time, and then continue the traction. And the traction growth is you're showing is much better good sign. For example, first month you had a $3,000, second month you have $4,000, third month you had a $5,000, then fifth month you had $7,000. So if you consistently grow that way, and it's one of the best time for you to ask a good money an investor to do investment because he'll understand it's growing now, right? So it's very important to have a traction. That's the reason you might have seen many times I said traction. I completely believe in it. And it makes sense, right? So people are now on the project report very hard to digest, and many of the people will not be able to visualize it as is how it works. And the traction happening, they'll understand everything. Even consumers, there's also even customers also understand, right, how your business works and your products and services, etc. Okay, so traction, keep it in your goal. Very, very important. Never forget this one. Okay. Now, before we go to next level, now, what are the questions investors will ask? Yesterday, we discussed around 30 questions. Now, we continue a few more questions. If we make it all of the thing, so if you wanted to have funding, large scale, small scale, you need to have investors to give you the fund. But most of the time, the investors' questions is trouble us. So we don't know how to answer these questions. So the few questions, if you can answer, and it's also important, like yesterday, we said about all the things. So yesterday, whatever we are not covered, I'll cover now. Okay, then before we go to the next stage. Now, so one is a market. So they ask about how big is the market opportunity, and it's very important. Even when the moment you're starting a presentation, the first thing according to me, you should show this market. You might have seen when even I present to you, I will use that market size. Okay, how much is the YouTube master? YouTube is market is how much is the affiliate market interest? How much is the consulting market? That's very, very important to understand there's an opportunity exist, and the growth and size and the potential. So that's the reason you always should start with your market size. Okay. Now, what percentage of the market share you are able to you're going to get? Because you say, I'm going to make this much money. So people are not going to believe that much money is possible to make. You said that already there is a market, this much is a 1 billion market, 2 billion market is there. I'm just targeting only in this part of the country, this part of the world. I'm only, the market only that, maybe that 10 million, 20 million. So I'm only looking at 1% of that, 0.5% of that. So that's one of the communication and some of the vision we must have. Okay. And then another thing is who exactly your best customer. As this we discussed a lot. I think that time I also asked you, tell you about when you discussed about the avatar concept of a ClickBank. So this is one of the question investors ask you. So you say that everybody definitely is not going to fund. So investors knows that if you should know your business, you must know your customers as well. Okay. Now, how long will this take? All the business proposal, etc., which you give it. People ask how much time you will take to implement all those things. This is another question they'll be asking us. Okay. And the numbers which you're showing them, capital or maybe monthly recurring investment or maybe other part, they'll ask you how you came out. So, there is a tendency for many of the entrepreneurs, you just randomly put some figure, approximate figure. We are lazy to work on it. So that actually investor will actually catch you. So they'll ask you based on what you came up. Then you say, I had a person to work on this. We put the list on and sometimes they'll ask you, can I see that list? So that's the reason yesterday I mentioned to you, your resources you wanted to have a list is very important. That list should be a kind of an annexure to your business plan document. And you randomly putting, that's one of the very wrong practices, because once you get money, you should know where to spend and how to spend and which portion to go, etc., etc. Okay. Now, people ask you, what's your PR strategy? How you communicate about your brand? And how much money you're going to allot for that, etc., etc. Okay. And who do you most aspire to be like? People ask you about this. Is another I've seen a very commonly asking many of the investors, especially to the new startup. Somebody starting a new, they'll ask you about. So then they'll understand. See, unless they will share. I mean, so someone else's vision how we understand. So to whom they're modeling it as. And to whom they're comparing with that. So their self-esteem also people understand. So this question you should expect from an entrepreneur to answer. Okay, sorry, investor to answer as an entrepreneur. Now, who do you least want to be like? You don't want to be like this. Think about it this way. I don't want to end up something like this. So also you should have a kind of an idea on it. Okay. Okay. What do you think this product and services is the right time for you? Now, especially the COVID-19 time, this is going to be very good questions. The market is going down. What do you think you should be there, etc., etc.? So much of thing will be there. So that's the reason. You should have a right answer to tell them of the real answer and genuine answer, the real reason, not a convincing, only to convince for investor. No, it should be a genuine answer. We should be doing it. Okay. This so one of the most important questions by investor: what are your marketing strategies? How the product reaches to consumers and how they reach the communication and how they can buy the product. And even the marketing strategy, sometimes you say digital marketing with the specification. You say you go for SEO, you got Google Ads, you do a remarketing campaign, etc. You need to do this one. So marketing In the marketing, they'll also ask for the traction aspect as well. Okay. Now, another thing is called, you also should have. So here, sorry, before we go to that, so in the marketing, the traction. So this is your marketing strategy. Is it working or not? From the traction, they understand. That's the reason, again, traction become in the part of the marketing as well. Very important. There's no because if you say I'm going for online marketing, does that work? No, is that working? Or how the traction you got that? So this is one of the questions there. That's the reason, as I mentioned to you, in a different level, traction should be there. Now, when you do initial stage, don't go for only one model. So when you present the strategies, you say, I'm going to money for this, I want money for this, I want money for this. And everywhere there's a traction salary there, it will be convincing for an investor to invest more. Okay. Now, what kind of a feedback and so for your received and what are the course correction you had done? This is about the feedback, the customer's opinion, and maybe a channel partner's opinion, even they ask you. So this feedback, based on the feedback, have you done any changes? And that's actually, if you have done it and you received a feedback and done a course correction, most of the investors consider as a good give you a positive mark of it. Okay. Now, especially you're into software, into sort of technology-rich products, you're an e-commerce company, you're doing a mobile application, or you're providing a SaaS, or maybe you're a freelance consultant. All the things people ask you about, how many people are there as a regular users, and how many customers are there for you at the moment. So this is very important. These are the information, even without looking into the papers, because they're looking into the presentation, by default, we should know. So that's investors also value. Hey, let me check it. Okay, like that as an investor, look at all the aspects as well. He wanted to see the numbers, and even you don't know real numbers. For example, I think it's around 55,000, but exact number I can tell. Like that also you can say. But then the moment you start looking, immediately the investor approximately. So approximately also, let me think. That means you don't really not focused. And this, I also use this one. Most of the time when I ask a report, I immediately ask this question, and people think I'm a hurry. Actually, no. So in that question, we can derive the person knows about it. How much is involved? How much is focused? A person is focused on a thing, not just making a report alone, and he knows the numbers. And if they're not spontaneously telling, instantly not answering with the exact numbers, they wanted to check it, even after asking approximately, then the focus is less. So that's exactly an investor also find out in the book. Because if the person is focused, he know definitely an approximate number, but the real entrepreneurs know exact numbers. They will tell you the exact number most of the time. So that's the reason this question is very important to answer very confidently on instant basis, not looking at the papers alone. Okay. Now, how long do your users stay on an average? When you average, like we discussed the YouTube ABD, same thing here is actually a person who's coming to your website. How much time he's staying back to your website, and how much time he's there. This is one of the questions. It's basically investors will find out about the customer's feedback. The way to understand. Okay. Now, what is your annual growth rate? So, because this question usually comes from his return on investment. He knows it is you're projecting this much, but what's your growth rate to provide me this kind of a money? So this is another way of he's cross-checking your answer. So this should match what you're offering in return on investment. You say growth rate is 30%, and proportionately is not growing. He feels somewhere the calculation wrong. So this is make sure that your growth and the projection you are given matches on it, minus the recurring investment. So basically, the profit, you should show that part. Okay. Has growth been in year, and it's a consistent, or just you made up a kind of a flash sale or etc. This consistently showing is much more important. Okay. Otherwise, you'll lose a confidence on that part. Okay. And if you say growth was less, they'll definitely ask you what is the reason for it. So you should tell them a season, maybe something unforeseen things happened, etc., etc. Okay. Now, can you provide me a demonstration of the products or service now? Now that's so important one. They will not give you time for a preparation. That means they're checking what do you call it, your capacity, and are you familiar what you're talking? You know about it. So immediately they'll ask you, you're not doing. In fact, actually, what psychologist says, uh, this is a demonstration is one of the best investment pitch. Might have seen it at this Shark Tank. Most of the investors come with the demo, right? And you might have seen those who come with the demo usually get funding as well, because instead of doing a presentation, they really understand. Okay, they really understand about that one. Okay, so actually, I arranged one of the funding for one of the companies initial stage. He was talking to something called a robot baby, a baby for a robots for babies. So when I tried to explain as a consultant, I tried to explain to the person who wanted to invest, he was not able to follow. But then the moment I shown that, people like to know immediately, oh, this is actually I'm looking forward to do. Okay, so the demonstration of that is very, very important to show this one. Okay. Now, many investors really ask you about the team, about your team. So the team, you need to tell them. So how many people are there and what are the people who are working with you. So very, very important part on. Okay. Now, where is your headquarters? And this is very good, based on some investors invest based on that. So where you're located, where you're registered, all the things is important. And who are the co-founders of your company? They'll also ask you, and the key members, who's heading finance, who's heading marketing, who's heading operations, who's heading the technology. All this question also you should expect from them. Now, what are the existing board members? Because an investor coming to the board, you should know his comfort level. Sometimes he also should know the decision-making team of the company part. Okay. Now, what key roles? What are the staff members you think you wanted more? This is a very tricky question from the investors part. You know why? Because one of the reasons most of the time, many companies, especially the startups, failed because they didn't get the right person to work for them. So if your answer is in that category, so investor will understand, okay, that is actually pending. So he does not have anyone to handle the technology, or he does not have someone to know. That is a very, very important. So you should know this question will be asked. So you should have an answer prepared for it. I mean, you should have this one, not just answer. Okay, then okay. Now, and people ask you about your experience and how long have you been doing this? What are the courses you have done? Have you went through any mentorship program? How you have a consultant for this? And did you worked anywhere for this? Or you visited or did a marketing study for this? Or some all the things they will ask you about your experience in the particular industry. Okay. And people also ask you about what things you are the right person to achieve this one. You put a list of a lot of things to achieve. So that definitely will ask you about what do you think, you have that capacity, you have that goals, but to do that one. Okay. And the one important thing is actually people try to find out what really motivates you to do this one. And as for an investor, that's very important. Based on your motivation, they'll understand your vision. Based on your motivation, they'll understand, okay, how good you will be making a growth. So that motivation very, very important. So you need to explain, this is what exactly I wanted. I want to make this $1 billion company. I want to expand this one. No, you really want to tell them what exactly, especially your self-actualization answer makes sense here. Those who don't know about the self-actualization part, you definitely, when we discuss with the VM COSA, we'll discuss about it. So that's about a kind of a life purpose you can connect with your business. So that exactly people appreciate on it. Okay. Now another questions is the investors ask if they really like about your business. They'll ask you about, is there any founders willing to partner? Only you're offering some kind, maybe you have 5 founders and giving out a 10% of the stake in exchange of $100,000. he knows there's a good opportunity, you're only giving out 10%. Now another founder is having a 20%. So he would like to exit from the company. He will be interested in. Okay, so this thing, another question they'll be asking about here. And of course, your competition. When you say there is no competition, it's going to be challenging for you. If you don't say there is no competition, then there is a challenge. It is basically why there's no competition. That means your business won't work. Why other people are not trying? So basically, kind of a competition is important, but competition threat is actually not too much of competition, not good, but little competition definitely expect to have. Okay. Now, this is your SWOT analysis. It's important. What are your strengths and other advantages you have compared to your competitors? And this is one of the things definitely they will ask you. Okay, so they should understand your strength, and they also ask you about your disadvantages and weakness. So this also we need to answer it on. Okay. Now, what are the barriers to entry or a scale that, what are the entry barrier you have to come to the market first, or even to scale up? What are the entry barrier you have? This also you need to, so they understand this is a challenge you have, and you tell them it is openly, this is what I feel. And most of the thing, if you can connect with the resources with money, so they'll understand you can come out with that entry barrier on it. Okay. Where is the competition is letting down your customer? Because because of competition, you are really losing your customers. So if you say yes, they'll ask you who's that competitor. Okay, and you need to have a right answer for that. Sometimes you say because my communication is less, because at the moment we don't have money, so we are raising a capital to have better communication. Those are the things you should have an answer there. Okay. And you say that other competitors are not doing this, so we are doing, so we are expect to have more customers to us. Then immediately another question the investor will ask you why they're not doing. Okay, so you should have an answer for that as well. Okay, how do you compare on? You can compare on price. So you tell me what's your price, what's your competitor's price, and how are they priced? How are you priced this one? Your comparison. They'll ask you the difference for the customer point of view. How much is this best for the customers? What are the advantages the customers getting because of your price? They will also ask you about your service compared to your competitors. How good your services part. Now, how do you compare on a customer satisfaction? So this is especially when you go for a second round of, they'll ask you about, because they know the initial set of our customers are very, very important for us to start up to grow, especially that customers become educated. That's the growth of the company. So that's very important to have that. Okay. Now, different things about the finances they'll ask you, and it is for that marketing expenditure is how much, other operational expenditure how much, and they'll ask you about the budget. What's your budget for your digital marketing? What's your budget for entire quarter marketing? And what's your budget for one campaign? These are the questions you expect to have. Again, these numbers, as I mentioned, if you know, immediately answering, it'll be good. Now, this is a very important scale on this one. What are your per customer acquisition cost? So to acquire a customer, how much money you're spending? This is if you do this wrong, and if you really would, when you're making a business plan document, if you don't put this figure, and many things you are telling about the marketing budget goes wrong. So you need to tell them how much you're spending for acquiring a customer. So for example, you're running a campaign. So you're spending $1,000. Now you got a lot of leads. Let's say you get 100 leads. Then 100 leads, maybe a 30%, 30, or maybe you take a 10%, 10 people you could convert. So your acquisition cost is $100, right? Because you spend $1,000 for a campaign, you got a lead of 100, but you only get 10 customers. So your acquisition cost is per consumer is $100. So that's a cost. It'll be coming, that's what exactly matter to the investor. Okay. And when you acquire this way, so you're spending $100 for a customers to come to you, how much time they stay back? And especially you're a SaaS model company. Every month there is a billing or every year there's a billing coming in. So they'll ask you, usual case, how much the the time they stay back, 3 years, 5 years, and the customers are you're leaving within less than a year time, it's a be different thing. Okay. And your debt about it, how much is the equity debt, the raised in the past? This is one question, that concern that should be part of your business plan document to put the numbers. And you can also should be ready about, as an investor will ask you the initial round of fundraising, who are involved and who is invested at that time, etc. This is also an important question. As we discussed at the band rate, it's an important part, right? Now, many people now, are you making a profit? Answer is no. When are you going to make a profit? A genuine answer we should give. Most of the time, the people say, this year I'll be profitable. If you are really profitable, only tell them. So it's actually, you can see that is, Jeff Bezos used to have more than 10 years. So he was always talking. He said 10 years to own up, friend. Any set of the investors were laughing at him. You think that 10 years we'll wait for it? He said, yes. And that's where you make money. Okay. So it's not necessary you have to say this year, next year. It depends upon the real calculation. 2 years, 3 years, 5 years. Sometimes, how much you're ready to do this is, to convince an investor, if you lie it's going to, it's the end of your business. Please don't do that. Tell them when you'll be profitable. Okay. Now, what are the 3 key metrics your team is really focusing on? Are they focusing on a product development? Are they focusing on customer support or a marketing, etc.? It's important. Okay. And are you given already any kind of equity? At the moment, you're already given to some portion of the money, equity to someone else. This is also, there are more other partners. This is another question they will ask you. Now, your intellectual property. You have an intellectual property at the moment. Are you registered? It's with you or not? So then again, so what are the legal risks you see about this business, etc. And are you aware of any product liability and risk about this business? So again, it has to be stated. And many people hide it as no. You need to tell them the risk involved. Even though you say there is no risk, but definitely they'll find out the risk. So better you say, in fact, actually, presenting in a pleasant way is much better for that. Okay. They'll also ask you about regulatory. What do you think about this business government regulation comes in effect? Is it legal? And do you think sometime tomorrow it get banned? What will happen? So this risk also one of the questions all the investors ask about. Okay. And what as we discussed, intellectual property you own, they'll ask, and who developed this fund? You to have a 100% ownership, and or any of the employees who left, they are also going to come, or other co-founders who's left, they'll ask you on the ownership, etc., etc. In a detailed questions before some, especially the angel investors finalizing, they'll ask you this question. Okay. Now, any other patent you have or a trademark you have, registration. This is another question. One of the, they will ask you before finalizing part, to understand the valuation process, they will ask you this question. Okay. Now, existing current intellectual assets, how it is owned, because especially the tech company, your major asset is it's intellectual asset, right? And so that is how it is there now, important. Now, the money which I invest, what are the things you're going to do? This is a question asked by many of the investors, and how you are going to use it, and how will this fund is allotted for the people, and how much you spend on a founder's salary. This is a tricky thing. Now, many of the founders take too much of salary. That's not a good idea. And you take a reasonable amount of salary, because you have investors, taking out a lot of salary is not a good idea, because the investors don't appreciate that one. And even the same with an expenditure as well. So founders, too much of salary spending, definitely not. An initial stage of the company, you also try to reduce the salaries of the company and salaries to the employees. And to the employee, tell them over a period of time, we will definitely proportionately will increase and do this one. Okay. And how much will be spent on overheads and expansion? There's two kind of expenditure usually will have, right? One, overhead expenditure, rent, salaries, expenditure, like technology expenditure, other expenditure on a daily basis happening in the company. And now money coming to you, $100,000, how much it will be for the next 12 months? You say, I'm going to spend half of the money or a full of the money. They really don't look into that one. I mean, it depends upon how you're making a profit at the moment. But investors are really interested in you to expand, and you're spending money for expanding on that is important. Okay. And now, for example, say you're asking about 1 million, but I cannot invest that man. I'll invest you with $500,000. So can you give me 10% of the stake? So usually we say yes, because now I had to only do for another 500,000. The problem is if you don't find that, so what will happen? That's a question they'll ask you. So you cannot be able to run, right? You'll not be able to run. So now this you need to know how to answer this one and how you structure this way. Very important part. And especially some of the crowdfunding platforms you go, they will not allow. Sometimes you don't have a sufficient capital. For example, you're trying to raise $10,000 through the crowdfunding. You raised around $9,000. The crowdfunding platform will not allow you to take it $9,000. They believe it is unless you have $10,000, it's not run out. So they return back to the investors that money. So that's a very common with most of the crowdfunding companies. Now, what are the asset will be invested to the capital? That's if you have created any asset, maybe it may be any kind of asset. Now it will be counted on it. Okay. And risk part of the investment, any kinds of risk we discussed. Now, how much your personal expenditure each month? This is many investors will definitely check that money is going for your extravagance. So make sure that is you little thin in the initial stage of the company. Do not invest huge money on your personal, your car, your travel, your other facilities like your secretaries and other things. So most of the time, many of the investors see you have 2-3 secretaries. Actually, they give you minus mark. And you're using business class tickets. Many investors has an issue with that. And you're using maybe a rented Mercedes. Investors don't appreciate that one. So all the things you need to take care of the initial part of the part. Even though they are investing with money to your business to grow, not for your luxury. But your comfort is important, and you need to dedicate more time. You need a more constructive. Of course, your branding also important. So you can have that. Sometimes investors just opposite also there. Investors for your branding purpose, they'll ask you to change your car. Sometimes change in a place, or maybe sometimes they'll ask you to fly on the business class. It depends upon the profile you carry. Sometimes to stay, you ask you to stay back in a different kind of, that some investors also that understand the importance of that one. Okay. Now, of course, your business model and which your market channel, what kind of business model you use it, and why you went for this model. Like you say, I'm using a freemium, so they'll ask you why you went for a freemium model. No, you say I'm using a SaaS, they'll ask you why you use a SaaS model. So you need to have an answer, not just randomly say, I felt like this. No, it's not be there. Okay. Now, which specific marketing channel are you using and why? And so I'm using affiliate marketing. They'll ask you why you are using a marketing. So the why answer is always will be there with an investor. You want to know why. Okay. So you should be prepared to answer for a why answer. Now, this is many people ask you, what's your plan B? If the sales is not happening through affiliate marketing, how are you planning to do? So you say, I have a digital marketing. I also have a franchising system. I also have a plan B as my own. Another team is working, etc. You should have a plan B. I don't have a plan B. Don't have a plan B is a big challenge. So you need to have a plan B as well. Okay. And what's your profit margin? 30%, 40%, 50%. You should the number you should tell them immediately. You're not looking into what is the profit margin for a product or a service you're offering. You should know what the profit margin you're working at the moment. Okay. And how you can improve this, how you can scale this one, and how it will affect this profit margin. Sometimes when the scale will actually increases the margin, but not all the businesses. Sometimes it will be less into that, right? Now, what we would have already made up until now, like earlier we discussed before, so you should know this one. Okay. Now, as we discussed about the story about customers is ask you about your service. Now they'll ask you, why do you think that customer is your, they'll also ask you one question, actually, who's your ideal customer? Then they'll ask you about, tell me some of your customers' name you have at the moment. So we should tell them. And what do you think they have chosen to you? So that is a kind of a cross-checking they do to understand what you're promising is working. Now, sometime when you look at it as in your organization structure, who can be replaceable in this one? That's a question an investor asks to reduce sometimes the cost, especially the COVID-19 time. You might have seen it. The many people replaced by investors because they want to control this money. Investors are involved. That's one of the Wall Street Journal talking about investors coming and looking at this kind of expenditure incurring because they really wanted to reduce the loss, not just so they remain as an investor part. And of course, the USP, which we have been discussing, right? What the uniqueness about your features, about your products and services which you are offering on it. And what are other streams of revenue you have at the moment? Now you have one product and service or a couple of products, any other source of revenue you have it or not, additional. And it's always to show that is, yes, we sell the products. And so for example, I'm an e-commerce site, I'll sell a B2C product, but at the same time, I also have an affiliate income. I also have a Google AdSense account. This an additional revenue you're showing to them is also a really good one. Okay. Now, how your corporate structure, how you set up your company, and will be the your CEO, that kind of a level. Also, they'll ask you a question. So you putting into the, especially when you say, I want a working capital, this much amount go for a salary. So there you put the corporate structure, the employee, staff structure, putting is good. Okay. Now, how the company currently organized and running, they would be interested to know. So you tell them it is. Now, existing shares, how the shares are split, how much percentage you are owning, how much percent they are owning, and why it is owning, and what the reason you allotted that much shares, and all the things you should have a real answer. You have to go back and check that. No, about your company, you should know all the things, okay? And is there any, sometimes the startup company, you already have anything, the board of directors are there, or we are going to be the part of the board, okay? First time itself. This is also a question. And this is a good thing, which is, as we discussed, where your company registered. This, with the offshore company registrations part. And this is a very much concern for investors, depends upon where the investor is from. Sometimes the investors wanted that company to be registered with, they are comfortable with us, whereas legally protected, and investment protection, everything's wanted, and they also wanted to have that regulation. So things goes wrong, they wanted to know, can I do this? Some of the investors will not invest with you if you're registered in so-and-so location, because he feel it is, and if something goes wrong, I will not have any option to even forward legally fighting. So that's the reason the investors point of view you need to consider, not only completely on a business point of view. So one of the things when you're registering an offshore company, as I mentioned, which is they should feel comfortable. Of course, your branding perspective is important. At the same way, investors' perspective also very important. For example, now you register a company like investor-friendly countries like a US or a Singapore or in Hong Kong. All these companies, all these countries actually, investors actually more comfortable with across the globe. It's not necessary the investor has to be from that side. Some of the countries which the investors are not comfortable, they know that there are a lot of limitation if I invest in that part of the world. Sometimes they cannot legally do. And of course, there is a political system is also one of the part. So that's the reason when you register a company, even you're choosing an offshore, many people ask me, say, cheapest tools, I always say Seychelles, but some of the investors may not be happy about an African part of the thing, company registering it as. Sometimes Belize is a Central American country. So that is also people are not comfortable with some cases. So it depends upon where your investor is from. And that's a place you should have a choice of a registration. But the primary choice is definitely your tax saving and your regulatory aspects. Okay, now. The people also want to know who's handling accounts, because usually the reports and everything goes, and plus the financial handling happens, the accounting part. So you should say I have a CFO, or I have a person, accountant handling this, etc., etc. So you should have a clear answer on. And name some of your team. You choose not to include as founders a team. So you thought of initially you wanted to have that one, but you're not taken them. So this is a very deeper question. It's a final kind of a questions to check with this, how things are formed. So these are the things, initial part itself. You should know these are the questions that people find out about you, and I'll ask you these questions. Okay. And they also ask you who registration process, who went to the registrar office and Ministry of Justice, and who filed the company, etc. is important. Okay. And they'll ask about if you're using, most of the time you go through an agent, like a company secretary or a CA, or maybe some other agency is doing that for you. And they'll ask you about the records to see that, and the paper also to see this one. Okay, so you should be ready, make it ready, that one. Okay. And existing financing round is another thing. Now, what are the rounds? Are you going the first round or the second round or third round? So things will be there. Okay. Now, what's your exit goal? So as we discussed, this is a part of your vision document. How are you going to exit? And even an investor, that exit is the most important part. Why? Because the return on investment on a monthly revenue or a dividend is, that may not be that attractive. They will not be able to provide. Were you, as a founder of the company, or you as an investor of the company as well, you really make money on exit. Getting acquired is one of the best way of making money. Or going for IPO and increasing, going IPO and putting to the shares in the market, and the company's net worth increasing is good. So now you might often, in that case, you might often own only 2 or 3% of your company's stake, but you'll have millions of dollars worth. So this is a part. Many people think an exit's not that important. Actually, exit is the most important part. So that's what exactly people make money. So the real you, the person who become really rich when you exit properly. So exit plan is the most important part. Okay, so you are going to acquire, or are you going for a merger and acquisition, or are you going for an IPO? All the things you need to have a part of your document. Now, the one thing is your expected time frame, for to happen this one. You should say 1 year, 2 years, realistic with as per your plan. You need to state that one. And next one is when you want to exit. Now, this is a time frame. Okay, you say 36 months time. You say 5 years time. Say 2 years time. So they'll ask you about how do you think who will buy you out your company. So I think when I talk to you about a niche store owner, a niche store project, I always say I'm looking for an Amazon or a Walmart, or maybe some other German company. So when will be help us to exit. And maybe 5 years from now, when there are online shopping mall will flourish and doing it. Now, our exit plan, though definitely the first choice is we need to get acquired by a large corporate like Amazon or a Walmart. That's the exit plan we have now. Now, even why added a German, recently a German company buy out so many aggregators in Qatar, right? So it can be that way, and also another possibility. So that is, you should have you say, I don't know, I never thought about it. It's not a good answer. You should have a plan. And you should tell them that I feel it is Amazon. I feel it's Walmart. Depends on what you feel here. And you talk about that level on. Okay. Now, when you expect, it'll be kind of follow-up round of a fund. Now you're coming for $100,000 to me, and you're saying you wanted actually a different stage of 1 million, 2 million. Now, which stage? When we'll be raising the capital? This is another question they will be asking you. And of course, as we discussed, pre-money valuation and post-money valuation, people ask you, and how much are you really trying to raise it? Exact numbers we need to answer. And how many previously somebody invested with you or not? And how many people invested? What is their track record? How many people invested and they got a track record? Now, and what else your investors can help you? So I mentioned this point yesterday. Most of the entrepreneurs choose an investor who can help them intellectually as well, strategic point as well. And their skills also important. I'll tell you an example. yesterday Shark Tank. Most of the entrepreneurs who choose, when they have a choice of investors to choose, it's very important to choose that kind of an investor part. Okay, so these are the things. I started with the small, I went to an up level. So your vision, I want you to have this all this point to go through and understand. Now I'm going to the strategies based on what we discussed, but I'm not going to discuss what the largest strategy. When you look at my questions, you can see the last of the questions, which is basically 2-3 years from now you'll have that questions on time, or maybe when you're raising a capital. Okay. Now we come back here, and at the moment we are just starting. Some of you have a YouTube channel, some of you have a AOBB, some of you have a affiliate marketing, and some of you have a niche store. So are you ready to listen to the strategy? Say. Now, so we have come to the at this stage. Now, this vision you have it as, you should be prepared. You should plan this. As I mentioned to you, my objective is you need to know this one. You should be familiar with this, and you also should know these are the things that is going to come to you another 2, 3, 5 years from now. And maybe 1 year itself, I think some of you may be asked, you really plan it, especially in our 100 days digital mastery program, the end of the program, the championship time, you have investors meet. In that investors meet also, this may ask by the people. And tomorrow we are going to do a business plan document. In that part of a business plan document, not as a Q&A, all this point to be covered in a different levels. So it's very important for you to start working up, business plan document before the pitch deck. I will discuss with the pitch deck tomorrow in detail. Okay. Now we go and discuss about 3 different strategies. At the moment, you can raise, you can plan now to raise itself. When I say maybe 0 to 3 months, 0 to 6 months, you can do. So this is basically what are the terminologies and methods which we discussed now. But looking at what the ideas we presented so far, in that strategy, you are a funding part. Okay. Now, so for a YouTube channel, it's a very simple way how you can raise the capital part. Now, first is step number 1. Some of you already have a YouTube channel, right? And you already qualified and done for you method, like the strategy number 10, or you have strategy number 9. You can do yourself the program. So that's the step number 1. So you decide to have a YouTube channel with strategy number 9. Or a strategy number 10. So of course, strategy number 10 is come with the offshoring and capture of videos, right? Now, those who are attending first time, please go and refer 18th to 25th in the July month when we did a digital mastery program. In the recordings, completely talk about strategy number 9 and strategy number 10. So based on that, you start your YouTube channel and set up the channel. And then what you do next? You go to step 3, Patreon platform for a video creation. So you know that you set up the channel here with the capture goods and offshoring. So you know that capture goods actually already successful videos you are modeling and making it is with the strategy number 10. Now you also take advantage of the crowdfunding platform of Patreon and for a video creation. So the platforms already give you a lot of money for every additional video you're making, all right? And of course, the Patreon niche, you need to choose a niche where you go to Patreon and understand what are the niche they support. Of Patreon, as I discussed, which help you to create a lot of videos. Now, of course, then you have to monetize all the videos. That's anyway you have a plan. You have a Google AdSense account, initial videos also you have it. Now, those who are taken strategy number 10 or a 10 for you model, you get a video. Those who are going for a strategy number 9, maybe initially itself you have to have video. So it depends upon that. You need to go to the Patreon and get the funding for each video to make. And there's a subscription model. I think a couple of days ago, last time we discussed with the Patreon in the YouTube Mastery time. Or you go to the Patreon and you understand that model, how it's easy, you can start on it. So then, of course, in all the strategies, actually, you get our consultant support. They will also discuss with you if you really want to take it forward on it. So you can monetize this. Now, once you start monetizing, maybe after 6 months or 1 year, and show the value and raise a capital. So one of the things, it's very simple way when you look at it, you're just setting up a video, YouTube channel. and doing capture goods and offshoring and using a strategy number 9 and 10 and going to the Patreon with your YouTube channel. Once your YouTube channel done for you ready, then go to a Patreon and they say, this is a video, which is, this is a channel, this kind of a video I wanted to create and using a Patreon crowdfunding platform. Then you monetize this thing and generate a revenue, and Patreon also give you the revenue part. So once you start generating revenue, then you think about forming a company. Okay, so you already have a money coming as a Google AdSense account, your personal account. So that is another way of attraction. You're already making money, right? So once you start making money, an example you take is you're making around $3,000 on an average in a month, in a year. So, every month. So every month you're making. So when you look at it as that is a valuation we discussed maybe 24 months time or 36 months time. So your valuation of your YouTube channel, when you go to the flipping valuation, that's another way. Or even you're personally talking to some investors, this can also have a minimum valuation of about $100,000. So there, of course, it's a 36 is more than 100,000. You round it around 100,000 is your valuation on that. Then you can raise a capital for a 25,000 on it, and then you exchange with a 25% of your channel cost. So you can actually raise a capital, and you can have a campaign fund. You can take out salary. This is a very small thing I'm talking about. It's up to you. You have more number of videos. You can increase. Just a sample calculation I taken as a $3,100 per day. 3,000. It can be 5,000. Can be 10,000. It's how you look into if you're creating a Patreon. Based on a Patreon also, you can create a video, and you can have a more number of videos. And as you remember that every video is an asset, right? Every video you create is an asset there. There's a video there, and very good communication you can do with investors, because not like other product. You remember this point which we discussed. Each video which you're creating, which will be there and continuously generate revenue, right? So the moment you show to the people, say that I have 100 videos now, which is making me $3,000. Now I'm going to increase every month another 25 or 30 videos, and I need this is the capital, and you can be part of that one. So this is one of the good communication. If you really plan it, you can actually work on it. And some of you already qualified to have an AOBB YouTube, and those who have taken a YouTube, you can actually consider this one. Okay, so plan it one. So one of the things which is, if you're not starting an affiliate marketing or an e-commerce business, you make a small business plan document on this as well. And of course, you need to go and explore the Patreon, open a membership, and understand and read about and do that, and take our support of our consultant and trainers to understand more about it, and exchange 25% of the equity. This is a sample calculation, not necessarily you have to value this way. For a calculation purpose, I give you $100,000, which is how I derived the market is a price. It's a 36 time or a 24 months time, right? That's the way people are valuing. So that's the valuation. But the site which I give you on a flipping time, that's another valuation method. You go to the flipping websites and what is the value they're giving for a flipping. So flipping valuation also can be considered for a valuation part. So you can say flipping, this is a flippable value. This value is given by the flipping website. You can name the ADM website flipping or a flipper.com or all these companies you can mention, even in your document, and say what is the valuation is coming. So it's very important to have a valuation model there. Okay. Now, I believe you understood. If you have any questions, maybe another 2 more strategies there, I'll explain to you. Or in the mastermind, we can have a detailed discussion about this one. Now, some of you have affiliate marketing. See, I have a very practical approach here. I give you a lot of terminologies, a lot of methods and other companies doing. That's what exactly your goal must be. Even the foundation time, you need to plan that one. But more realistically, when you look at what you can do now, that's what I'm talking about. Now what you do, the people who are going through the 100 days of program, whether you're a mentee or a mentor or a consultant or a trainer, and in the strategy, you're becoming part of the championship party, what you do. Now, strategy number 26 is basically through affiliate marketing, how you raise funding. Okay, so a part of the flipping, you can see many of the people who raise the initial capital for their e-commerce businesses through affiliate marketing. So in the e-commerce, when they start, they earned a lot of money, right? But affiliate marketing is easy. You don't want money, much money, just a simple website you can start with. There are so many startups, so many people who started an e-commerce company. Initially, they started affiliate marketing. Two reasons. One is the less money to start with. Secondly, to understand the market of that niche, it's easy to start an affiliate marketing. So with this, if you really think your affiliate marketing in that direction, you can you can actually raise the capital for your e-commerce projects. So how it is? So start an affiliate marketing and choose the niche which you can start in e-commerce. So don't choose any of the random niche. Choose the niche where you can actually start an e-commerce. You really are basically you should think a reverse, not just introducing for how do I say? Not just introducing kind of some just niche. I started then I raise a capital. That's the wrong method. What is the right method? The right method is basically you think about an e-commerce company you want to really start it. That's a vision. Then you start an affiliate marketing on that. Okay. Or you already started an affiliate marketing thinking about you wanted to start it this way. You double check that the niche you are choosing. Would you like to do as an e-commerce and make more money? So that can be a thought. So choose a niche which can start as an e-commerce too. You don't have to give up affiliate marketing. You can do affiliate marketing and e-commerce together. So then what you do and create attraction. For your affiliate business, you make some kind of a revenue generation. In the first quarter, 3 quarters, maybe very less money. So one of the things is actually, I think some mentors already went through in the VM goes at time, we will give you a 36 months plan or a 5 years plan where you make consistently on a monthly, there's a monthly revenue and a quarterly profit model. So where you make $1 million or $2 million. In the traction, the first 2 quarters you make a traction that show this is a vision I'm working, and through an affiliate marketing, I'm trying to do this one. But this, I can reach faster if I start an e-commerce, or I can do much bigger if I can do e-commerce, but I'm already doing it, making money. Even though it's a 10% of my margin, still I'm making this money. So in e-commerce, I can go to 60, 70, 80% of the margin instead of 10%. Affiliate commission only get a 10% margin, right? So that's the reason you create attraction. Example, again, you're making it $3,000. So again, like your channel, you plan for 1,180,000. Same way, your affiliate website also, you can actually you're creating that way. So if I form a company, start an e-commerce business and affiliate marketing, you say that is, and now I'm forming a company because I'm already doing affiliate marketing. I'm making money. Now I want to expand. Same niche. Now I'm only making a 10% as a profit. I'm only doing an affiliate. Now I'm going for an e-commerce. And my margin can be increased to 50, 60, 70, 80%. So my profit can be exponentially grow. So I want to form a company, and based on this one, my capital is this much. So you share maybe 25% or 10% or 20% of the investment in exchange of you value for 100,000, you value for 500,000. It's up to you to do the valuation. Of course, you need to take someone help for a valuation. Apart from the tools, of course, in the flipping website, like we discussed, you can go and do a valuation. But the best is you can have a valuation yourself through an agent, through an agencies. They do a valuation for you. That valuation document is help you to show to the people to get the fundraising. So then you want to start a company. Because you show that is you're already making. And they will not demand you. For example, if from starting the scratch, you don't have nothing, you just have a project report or a business plan report, they'll demand you more stake of 50, 60, 50% of it. That's too much. So instead of that, you give only 10, 20% in exchange of the investment they do. So this is another method of raising a capital. Now we go to the for you wanted to start an e-commerce business. I think most of you already, I think I noticed that you have an affiliate website now. So plan this way. So tomorrow when the business plan document you make it, all the things you should be considering on it. Before we go to e-commerce mastery, then we go to VM Gosa. So before that, we should have all this aspect. Now, this strategy is a very interesting strategy with convertible notes. That is not in public, everyone has it. Now you have the advantage, especially the people who are going through this workshop. You understand this better. So this to understand, you need to know what is convertible notes. Yesterday I discussed, and today also I discussed with you how you do it is. Now, an example with this, you look at the opportunity like this with us now. We have an online shopping mall, right? So this you get you can start an e-commerce done for you new store in a global scale with one with a complete store with you with an exclusive niche for one market, right? And you start an e-commerce with an offer price. So now you look at a compare with somebody want to start an e-commerce project with all the scale which they wanted, necessary thing they wanted to start off, and versus the investment they had to do through shopping mall price. So choose a niche. So first of all, now the problem here is many people say, I don't have money. That's one of the excuse people make. So now if you are part of this 100 days of program, you have the option to block it. I think I told you last time also. You can block it now, and the price will go when you're picking up. For example, now the price is around less than $2,000. Okay, now less than $2,000 is the price, a special offer price, but in the website is a $7,500. That's a public offering. But the niche store, the price now at the moment, you get a complete a done for you e-commerce with exclusive market, with a payment gateway, with all the facilities of an e-commerce site, which is usually how you can see in the website all the thing. Or 29th, I'll be explaining all the features of that, how it is completely done for you model we'll give you. So that is less than $2,000. Actually, you can block it. You're not even required to pay the money. That's the point. So today you don't have any money. You can try this method. So you block a niche and you say that exclusively, I blocked a niche exclusively for a particular market. And that niche you block for $2,000. But actually 7,500 is the value, right? 7,500, you can say that's a 7,500 is a real price. Even investors use $2,000. Actually, I blocked it now. Okay. Now, investors, you say that is, I'll give you a safe, convertible notes with a valuation of a 7,500. You can ask him to pay you $7,500. It's not only the money you choose to pay to us, but some money you know to have your own salary. You want to set up your own infrastructure. You want to buy computers. All the thing you can use that one. It's not too much of 7,500 is very small money, but you have to very carefully use it, and you also spend some money for a campaign part. Okay. Then you issue him a comfortable note with a safe. Safe we discussed. A simple agreement for future equity with a valuation cap of 1 million. There's a one important part. In convertible note, when we discussed, which I mentioned, it should not have too much evaluation of the company, because the person investing 7,500, he will not have much share on that one. So you need to protect giving a kind of a cap. And plus, also don't, safe, when you look at the safe template or same method, there's something called interest element. You say, I'll pay you interest to avoid it, because when you pay interest, you need to pay every month the interest, right? To not take it. If you remove the interest and give them a valuation gap of 1 million, it can convert it. Now, offer him a discounted price of a liquidation within 18 months to 24 months. So now he has this one safe agreement. 18 months to 24 months is the ideal time. You try a bit early. Sometimes it sounds very good in theory, but practically 18 months to 24 months is the time. It's actually doing. And so when you value that company for at that time $1 million or $500,000, but you give him a discounted value price. So that means the money he investing, he get a more one. And you also pay back his initial capital maybe at 12 months onwards. Because once you start making money, so for example, 7,500 he paid you. So now $7,500 divided by 12 months, or you can pay back, $500, $600, $650 per month after 12 months. So that's a good offer for him. So my money is not going, because he say I start making, I'll pay you $650 every month when we start making. You can also put a condition that I'll pay you $650 when every month my company making $2,000 profit or $1,000. Then only you can pay, right? So that you can have this convertible notes even with that condition. So you can give him a percentage of your company plus the money he's investing. You can tell him I'll pay you back on a monthly basis the capital without interest. Okay, because with interest your calculation and things goes wrong, right? So this is one of the things I think all of you should take an advantage, because the good thing is about this, now it's available for you. And I don't know how much you understood. It's a very, very important for you to look at and understand. If you are not getting this much idea, two things I would recommend all of you to do. Tomorrow we have a business plan documentation. So it should be a business plan document. So when a person asks you a soft copy or a hard copy, show them. So tomorrow you attend, so you can actually start making a kind of a business plan document and put all the information. Then next week, completely in e-commerce mastery, and 29th of this month, we are doing a complete about the online shopping mall with all the features, etc., etc. So you have a complete idea that one. Second one is to raising this with this strategy to the capital, starting from 7,500. I just set in a $7,500, and it's very, very, before you starting a company, you're not even forming a company with a 7,500. You're just putting a convertible note to him and saying that is, in future of the company, when I'm going to start, so that's the time I'll give you 10% of the stake or 20% of the equity for this with a valuation cap of $1 million. It can be 100,000. It's up to you how you visualize and show that one. And plus, you're agreeing to him to pay back his initial capital as well. So this is a fantastic deal and very win-win situation for you as well as the investor. And I don't know how much you understood. It says if you not really understood, you need to meet the consultant of us. Maybe tomorrow you meet our mentors and say that is you wanted to, out of the three, which one you liked it. And the mentors may not be able to explain to you this aspect, because you hope you understand that. You got, tell them you need an appointment with the IBCs. Now, with IBCs, I'll be spending the time, because this is one of the model which I'm recommending to everyone, not with the offer price, which is actually when now you can see the store price is $7,500 to $10,000. And one of my ideas actually, people also should raise the money to run this. Many people say 10,000 is a huge investment to start with. So I said, okay, there are many people who invest money, and this is actually planning to do like a flipping. People can actually buy it online. So this should be automated one online. Okay. So you talk to the IBCs, and with IBCs, I'll also sit with them and explain to them strategy, and they'll come back to you the model which you have. Okay. So you choose any of the three, either YouTube or affiliate or this one, niche store part. All the things. Okay. I think the time is up, and I would recommend, I'll not be able to take a Q&A now, but I've definitely in the mastermind we'll discuss in detail, and please join us there. And tomorrow business plan document, and Thursday definitely we have a detailed Q&A session. You go through all the notes and go through the recordings and come back with the detailed questions. Okay, thank you so much, all of you. I believe yesterday and today given a little idea about how we raise resources to run this business, and various multiple options as well we're given. Okay, so thank you so much, all of you. Choose any of the strategy that's more apart from the understanding the terminologies. I believe you take it that seriously, and you don't take it as excuses or limiting belief that is I don't have financial resources to run this one. Okay, so thank you. I'll join you in a moment from now in the mastermind chat, and we'll discuss in detail over there. Thank you so much.